2020 has not been a great year in terms of living on this planet, but it has been a great year for the IPO market. The first IPO coming up in December is the Burger King IPO. In this video, we are going to cover the basic IPO details of Burger King and compare it with the competitors and also the entire food service market of India. Finally, we'll have a look at the financials of the company, including the loss, revenue, and the valuation in order to find out whether we should be investing in this IPO or not. The Burger King India IPO will be opened for subscription between 2nd and 4th December. The allotment will take place on 9th December, followed by listing on 14th December. So the entire process is going to take around 14 days to be completed. The Burger King India IPO size is 810 crore rupees approximately, out of which 450 crore rupees is a fresh equity issue and 360 crore rupees is OFS. This means that the promoter company of Burger King India, which is QSR Asia Private Limited, will be selling 5% of the promoter holding at around 360 crore rupees during the IPO. The price band of the IPO is 59 to 60 rupees and the lot size is 250. It means that you have to invest a minimum amount of 15,000 rupees in the Burger King IPO. So let us now have a look at the Burger King India business model and compare it with the entire industry. Burger King is a QSR chain, which means a quick service restaurant just like Domino's and McDonald's. The entire food service market in India is around 4,236 billion rupees and the QSR chain accounts for only 188 billion rupees. This means that all the organized players like Domino's, McDonald's and Burger King accounts for only 4% of the entire food industry of India. Out of the 188 billion rupees, Domino's has a 48% market share. It shows that Domino's is an undisputed QSR segment market leader, followed by McDonald's, which has 11% market share. It shows that Burger King India has a long way to go because it just has 5% market share in India currently. Understanding the motive behind the IPO is also very important. We must understand the reason behind the IPO and the actual calculation of where will the money go to. The company will be using the amount from IPO in opening new outlets in India. Burger King India has an agreement of opening at least 700 stores by the end of 2026. So they will be using this money to expand the number of branches in India. Secondly, they will be using this money to repay the loans that they have taken. The current number of stores of Burger King India is around 261. The company has to scale it up to 700 as per the agreement by end of 2026. This means that the company has to add around 450 new stores to its portfolio in the next 5 years. Most people think that a growth of 450 stores in 5 years is a big achievement and a big growth. So let us compare it with other QSR chains like Domino's and McDonald's. Domino's has a master franchisee called Jubilant Foodworks in India. The Jubilant Foodworks company is listed and we have all the details according to the stock exchange filing. Similarly, Westlife Development, which is the master franchisee of McDonald's in North and South India, is also listed on the stock exchange. So let us now have a look at the store count increase or the store count growth in the recent years for both the companies. Domino's has grown at a CAGR of 16% in the last 10 years, which means that they have added 1,000 new stores down the line in the last 10 years. Similarly, Westlife Development has added around 100 new stores in the last few years, which is a CAGR growth of 10%. This shows that a 450 store growth in the next 5 years is not something abnormal but very normal. Now let's have a quick look at the financials of the company to understand whether we should invest in the IPO or not. The revenue from operation of Burger King India has grown from 230 crore in FY17 to 846 crore in FY20. it seems that the growth of the company is quite reasonable and the growth rate is good. However, we have to understand that the expenses of the company is also growing at a rapid rate. This has resulted the company to remain in losses in the last 4 years. The company has reported a loss of 71 crore in FY17 and this figure has not gone into profits ever since then. The company is loss making consistently and this is something very worrisome. Now let's compare the financials of Burger King with other companies like Jubileon Foodwork, which is the master franchisee of Domino's in India. Jubileon Foodworks is growing at a CAGR of around 23%. It shows that Jubileon Foodwork is having a good margin and profits. When we compare the profits to Westlife Development, which is a direct competitor of Burger King India, it shows that McDonald's or the Westlife Development is having a very inconsistent profit in the last 4 years. The company has reported 2 years of losses and 2 years of profit in the last 4 years. This shows that the margin in the burger industry is quite infrequent and keeps on changing. It is also important to understand the valuation at which the company is bringing the issue. So the IPO is priced at around 59 to 60 rupees. Recently, the company has done an off-market deal where they sold the shares of the company at 58.5 rupees. It means that the valuation of the company is somewhere around what it has been depicting in the IPO. So, the valuation is quite justified when we look at the previous deals of the company. If we look at other methods of calculating the valuation, we cannot use the PE ratio to find the valuation. The reason being that the company has been making consistent losses in the last few years. However, we can use the price to sales ratio in order to find out the valuation of the company. Price to sales ratio simply means market cap divided by revenue. If we compare it to the competitors, Jubileon Foodwork has the price to sales ratio of around 8.4. Similarly, McDonald's or Westlife Development has a price to sales ratio of around 4.37. Burger King India has a price to sales ratio of 2.66. It means that the price to sales ratio or the valuation is quite on the lower side compared to the other companies. It shows that the valuation of the company is quite justified and the intrinsic value lies somewhere around this valuation. Now, the most important question is that should we subscribe to the IPO or not? Whenever a company comes up with the IPO, we don't only look at the financials but also the buzz around the IPO. The buzz around the Burger King IPO is very positive currently and the IPO has already been subscribed completely in the last 2 hours. The grey market premium also highlights 50 to 60% listing gain, which means that if someone is looking for short-term gain, they must subscribe to the IPO. However, it involves certain risk because of the volatility in the market. However, the long-term prospectus of the company looks a bit worrisome because of the financials and the consistent loss-making nature. So what are your views on the Burger King IPO? Let us know in the comment section and also subscribe to the channel to remain updated with everything related to finance.